Hey everyone, who's ready for that SpaceX IPO?
Hello, Haley.
What a BD. How's the volatility treating you?
Like a baby treats a diaper.
Oh man, I just had my kid pee all over himself and the diaper and everywhere. I was like, guys, I have to step away. So
I always thought it'd be fun to get a picture of that and then label it the Fountain of Youth.
that is pretty funny actually.
No, I got laid off on the 1st of May.
Hmm.
So I am now on a totally and completely unplanned sabbatical.
Congrats.
And so on the bright side, I get a little more time to do some of the Python stuff I've been putting off. But
Yes.
on the other hand, I don't have the income coming in that I kind of fond of.
Blessing, maybe a blessing in disguise makes you hyper focus.
I would hope so.
I heard something called what's it called? SMART goals. And that helps you really narrow it down. Let me quickly Google what SMART goals is the acronym. It's specific, measurable, achievable, relevant, and time bound.
Yep.
And time bound's always the key for me. If I don't time bound it, I'm like, I got time. Never gets done ever. So SMART
Well,
goals.
well, welcome to retirement.
Yeah, I got some odd looks from. I did talk to Tractor Supply and a couple of parts stores. We've got a couple of distribution centers here, and asked if they would needed any extra part runner because a lot of it'd be a fun semi-retirement job. And frankly, I need the health insurance more than I need the money. But that one place is like, no, we got an endless supply of high school students and college students that will work for a lot cheaper. Yeah, but they'll be gone. But they price that in because they know that they can replace them in a year or two for back to a cheaper rate.
Your background is software?
Yeah, from the ag sector. So my graduate work was in the ag options and derivatives, and then stumbled in. I ended up doing a lot of the database work for that, so I would have the data to do my research, and ended up being 25 years of working around databases since then. So it's always been in agricultural or finance.
Where are you based out of, BD?
Lincoln, Nebraska.
Lincoln, Nebraska. Wow, I'm in San Francisco. I know nothing about agriculture. The closest to agriculture is AI, and it's only because they both start with A.
Yeah. Well, if
Um,
you get on Interstate 80 and point east, when you're halfway to New York, I'm on the south side.
I'll wave hi.
Yeah.
I'm gonna go on probably a little trip on June 19th just to see how 1 2 month year old will kind of do on a little trip.
We had a nice little route that I used to drive quite a bit with my son when he was little to get him to go to sleep. And then we in turn used the same basic route when he was 15 to teach him how to drive. Actually, 12 or 13 or 14 to teach him how to drive.
Mm-hmm. Real nice. Let me see.
Oh, cool. New slide deck.
Yep. I yeah, I'm starting to get my stuff together finally. Having a kid is just a whole routine change. So I'm finally getting back to charting, getting back to my day to day, and I'm like, I'm so glad I did not go into the market last month because I would have lost my mind.
Well, you just would have gotten out fast.
Yes, I would have. But it's like I know that's not like me. I'm like, I'd rather sit out and not make money.
Well, it's if you're in the long term, I guess you don't want to haggle with it.
I do have a long-term account. I've been like, there's some positions like Nvidia, of course, as you guys know, I've held it for, I don't know, a very long time. I'm very bad at time. So we're at the top of the hour, 2 minutes past. Let's go ahead and get started. Welcome to the monthly LEGS meetup. I'm Haley. I'm your host. Let me read the disclaimer. This presentation is provided solely for educational and informational purposes and should not be considered investment advice and endorsement or recommendation to buy, sell, or hold any security. I am participating as a volunteer and not receiving any compensation for this presentation. All investing involves risks, including the potential for significant financial losses. Viewers are encouraged to perform their own due diligence, evaluate the personal financial circumstances, and consult with a qualified professional before making any investment decision. Neither I nor any affiliate individuals assume the responsibility or liability for actions taken based on the information presented here. Let's get started. It's me again. I recognize most of your names. I've invested for 20 years since I was a kid, JDSU. I've gotten about somewhere around 7,000-8,000% gains now in Nvidia. I'm still selling ever so slightly. And why I host this is because I like everyone here. You guys are amazing. You guys bring new ideas to me, keep me engaged in the market, and also keeps me honest to myself. I still have not invested this year. Yes, I have some stocks, I have some holdings. Some of my friends were telling me, fun little story, right? I was about to invest into XAI, and my friends were like, Haley, you don't have any SpaceX stocks before the IPO? I was like, no, I don't. So it's like SpaceX is one of those, it's like I just didn't believe in it because SpaceX bought XAI and XAI now has SpaceX stocks. And now I'm gonna see how the lockup period is going to do. Wait, there might not be a lockup period, but NASDAQ changes rules. So today this is what we're gonna talk about. So just the general stuff, the legs resources, talk about Gary Taylor's leverage edge, some major events. We're gonna do an educational topic. I finally have another one out. So I kind of simplified it down to an acronym. It's called PAGES. So pretty much it's price accumulation. Oh man, you guys will see in a sec. My brain is fried once in a while. And next meetup is July. How does the market look? Well, the market is actually looking a little bit choppy right now because the last follow day was about 1 month ago. I thought it was in April, May. I think it's in April. Sorry, that was an additional follow through day was in 0508. There's 3 distribution days on NASDAQ, 3 on S&P. Roble, I'm gonna start reporting it. The Woo is actually, sorry. I was sleeping when I was doing this. I think the Woo is red right now. Give me 1 moment. I'm gonna double check my sources. Does anyone know if the Woo is red or green? I'm pretty sure it's red.
It's red and it's correction.
Yeah, it is. I'm like, there's no way the Woo is still green in this environment. So just a reminder. Oops. Sorry, my friends' names are Woo also. So let's see. I'm on the right one. It's not owned by me. Don't know where it is. Find it, but the Woo is red. And the MMTS is also red. So let's take a look at that's NASDAQ daily chart. So what kind of happened? So this was updated as of yesterday or 2 days ago. So 2 days ago, it looked kind of choppy, but I really want for us to take a look at the updated charts. So we take a look at more of the updated because it's kind of a critical point here because we're right above the 50-day. There's a bunch of news that's coming out. So let's really take out the updated charts. And I'm going to see what I just saw a chat message from Frank. I'll answer that in a bit. Yogesh can answer that in a bit. So what's been happening? So this is market search, investors.com product or Dow Jones Industrial. So what's been happening is we're kind of right up for the NASDAQ, we're actually right around that 50-day, right? So we're kind of went down. Yesterday was a little scary. It went down another almost 2%. But today, after the Iran talks, supposedly, it's the market kind of made a bounce. The volume is a little bit lower, but we'll see kind of what happens in the next few days. Why this is pretty important to look at the indexes right now is because we're hovering right above the 50. This is going to be the first 50-day, maybe a bounce from when we happened over in April. I'm going to zoom in on this. So what happened in April was that we had a follow through day and we just kept going up and up and up and up and up until last week happened. And now this week we're right around that 50-day. So what I'm really watching for is like what's going to happen in the market tomorrow. And what I really care about is a 2% undercut of the 50-day moving average. If it undercuts the 50-day moving average, especially on above average volume on the index right over here, there's going to be some, wow, all my moving averages are messed up for some reason. Anyways, I'll fix that later. If it's a 2% undercut of the 50-day moving average, that's when it's really to watch out for. And we'll take a look at all the other indexes too. So we take a look at the
So
S&P
where
500.
does the 2% come from?
The 2% was it was a Mike Webster and William O'Neill kind of ideal. So Mike Webster wanted to, lack of a better word, numberize what William O'Neill is seeing on the charts. So how he did it is what gives it a clear undercut of the 50-day moving average. And a clear undercut is usually about a 2%. So it's not exactly 2%, but it's about 2%. So you can do like 1.8 to like 2.2 or something. So that's where the 2% comes. comes through, and I've been using it.
So
So
if it cuts by 2%, then you will consider it as a downtrend?
yeah, it was a downtrend. I should sell all my holdings for my
Oh,
cancel.
okay.
Long term, different story. But can for my growth stocks, I would sell everything. So SPY, oh my lord, I'm gonna edit this. This is annoying. So that's a 40. Bear with me. If you guys are curious about what all my moving averages is, it's a 21 exponential, and I like that pink. And then this is my 50-day, and it's pretty far from the 50. Sorry, let me redo my analysis. I didn't recognize my indicators were messed up. So my apologies. I didn't know. It was not close to the 50 days. The red line is a 50-day moving average, 10 and 21. So it's right bringing past the 10-day moving average. So that's the first breakdown. I'm sorry, guys. I did not recognize that my indicators were a little messed up. Wait, I'm on weekly chart. Sorry. You guys are gonna kill me. I'm losing my brain these days. 10, 21, 50, 200. Oh man, you guys must think I'm a madman.
It's almost like you sleep deprived from having a child.
This is why I'm not trading right now, because I think my indicators are wrong and I think I'm on a daily chart, but I'm actually on a weekly chart. Oh my lord. But let's keep on moving on. And back into the charts. I have an Aura ring. Fun story on a tangent. I have an Aura ring. It tracks my sleep deprivation. It looks like a mountain. It just keeps going up, riding the roller coaster. And some days I do get more sleep than others. Today I had a tough time waking up. I woke up at 3. So S&P 500, and this is the Russell 2000. Russell is still lagging behind everything. And here's what I'm watching. So this time I checked to make sure they're all actually in bases. I've remade the orange line over here that this is a sector indicator. How is the sector doing, like what Yogesh was saying? How's the sector doing relatively to like the S&P 500? So I want to see that if it's in base, if it's breaking out, if it's in basing, if it's going sideways, how big's the base? So Ligan, Supergroup, Insight, these are all stocks that I'm putting back on my watches. I'm getting back into my stock trading routine. I'm looking at Crystal Biotech. This one, technically, it has broken out, but I do like its kind of solid, tight areas. And especially in this current past 2 weeks, it has been making new RS highs. Same thing with Intel. Intel, it you could call it a double bottom base. Maybe it'll form a handle, maybe it'll start breaking out. If you draw a trend line over here, you could buy an early buy point. Who knows? But it depends if you like the stock. Hanami Financial.
Intel is behaving exactly like SanDisk when it was consolidating few months back, I believe in December.
Yes. So since you brought up SanDisk, one of our favorite stocks, I'm going to show you the SanDisk chart. So this is what Yogesh is referring to. This is a double bottom base. That's right over
No, I'm
here.
actually referring to December.
Oh, over here.
Yes.
So,
And I believe that red line is a 50-day moving average.
yes, it is.
Yep. So Intel is behaving similar to this one. It is also staying above its 50-day moving average, consolidating right before 50-day moving average. And if the market breaks out because of the Iran deal and the IPOs that are coming up, it's going to explode further.
So I assume this is what you would agree on with me. It's that Intel is going to be one of the vertical manufacturers and everything's going to be made in the United States. It's not going to be shipped over to Taiwan. So that's
Correct.
one of the keep everything in America slogan campaign. And that's why Intel is getting such awareness from a lot of people.
Yep.
Yogesh, I'm kind of curious. Why would you say it's more closer to December? Is it because it's the first run up into a basing? Is that why it's closer to December than February?
Yeah, that's how I'm reading it.
Gotcha. Because as a chart, I would say the double bottom's over here, but as a overall stock, it makes sense. That's right over here.
Yep.
Cool. Oh, I guess my sleep deprivation is going away by you talking a little bit, Yogesh. Thank you. So Intel, beautiful. So guys, watch these stocks. I'm finally getting back into my routine. So Hanami Financial Corp, I just like the technical indicators on these. I am not as good as the fundamentals here, but I always look at the technicals to see how it goes. Then I research into the fundamentals, and that's how I personally do all of my pickings. So one of the things I've noticed though, it's that a lot of the healthcare stocks, like biotech stocks, they're actually starting to form into bases, and they're starting to look pretty. They look very pretty. I know I've talked in the past about XBI ETF because sometimes with healthcare stocks, if something gets, I think it's FDA, Yeah, the FDA doesn't approve it, then all of a sudden the stock drops. So sometimes buying an ETF like XBI helps reduces your risk because it still keeps you in exposure in an industry that you think that is going to be booming. But in individual stocks wise, it seems like there's something that's happening and they're consolidating quite a bit and quite nicely. Even if you look at the RS rating over here, it's bumping new highs, bumping new highs. So it's looking quite, lack of a better word, yummy. So let's take a look at a few stocks at this point. So what is going, so I'm still getting used to this brand spanking new interface. I'm starting to like it more and more. So what I've done is I've made a list of kind of like the market leaders of what's happening, like what are the ants, what's really booming. So if we take a look at Marvel, how's it been doing? Where was it basing? Where did it start popping out? So we can look at what happened in February. I look, especially on a Marvel chart when it's this long, I always like taking a look at the monthly. I'm like, how long has this base been forming? It's been a 3-4 year base. Yeah, 3 maybe 4 year base. That's right over here. And now it's fine just ramping up. And we take a look at the history of Marvel, we can see that it has a history of just forming extremely large bases. So I get a rough idea of the characteristics of stocks, but this does not give you a rough idea of the current situation in the economy. Because even though AI maybe started in around 2015, 16, 17, it wasn't about hardware. It was still about like it's still about software and SaaS and all that jazz. And now, as we start looking at a closer picture of the semiconductors industry, it's been a lot more exciting. Is it the year of 1999? Who knows?
Is your scale logarithmic?
It should be.
Because on arithmetic scale, this has gone parabolic.
Let me see. I'm still not perfect in using this system yet. It's over here. And it is volume scale is logarithmic, price scale is auto fit. Yes, it is logarithmic. If I'm looking at
Yeah,
how,
can you make it standard and say the same chart?
let's do it. I'm clicking. Oh, this is a much better view.
Just a different view.
I do like this view better. I forgot what I was playing with. Let's see, 80, 20, 20, 40, 40, 60, 60, 100. No, this actually makes more sense to my eyes. Thank you, Yogesh. Because this chart actually reminds me of deja vu. I was like, I've seen this chart before. So market leaders, right? We can take a look at Bloom Energy also.
So what are your parameters for market leader? Is it a inbuilt scan or you created your own?
So it's pretty much me just listening to a bunch of other people. But the first thing is the price going up? And I want to see huge price gains. Like in market leaders, I want to see like 100% price leaders. I would take it from like Jerry Sammons. I would take it from Roble. I would take it from Mark Minervini. I would take it from all these guys who's saying these are the stocks I'm really watching, or these are stocks are just going crazy. And how can we make these as guidelines for future leaders? So it's very much whatever my heart whatever my heart says. There's no real scientific way to put what market leaders are, except the price is going up. It's almost like, how do you say it? It's almost like, so one there's this is anecdotal. I was I was going to a showing as a real estate agent, and I was passing by a middle school, right? And this middle school person says, "My parents are rich. They own SanDisk and they've owned it for 10 years." I'm like, that's BS, first of all, because it's just IPO'd. And second of all, what the heck? How do you even know SanDisk? Or my parents have worked at Amazon and they have so much Amazon stock now. We're just loaded. This is private school. So I'm like, these kids in middle school and I'm in high school, they're talking about stocks and the parents' ownership. So it's almost like, what is going on in this market? But then again, I'm in San Francisco. So who knows? It's just kind of weird to me when like middle schoolers are talking about stocks and their parents owning shit about ownership. It's just weird. So let's take a look at, and I don't know what happened to this chart over here. Oh, right. I assume it got delisted or something. So over here, and this, I like taking a look. Oh, sorry. So yeah, Rito, there's a good amount of Bay Area jobs that comes from healthcare because it's a biotech hub over in South San Francisco. Genentech, Pfizer, Merck, all those dudes. And as a real estate agent, luckily I get to see how much housing they can afford. And as real estate, the minimum you should have is $2 million. Interesting. Rio said that middle school kid could be right because SanDisk was trading over 10 years ago before Western Digital acquired them, and then they spun SanDisk off again as a subsidiary. So maybe they're right. So they own SanDisk to Western Digital back to SanDisk, maybe. Cool. So it's going back up as leader for NBIS. Intel, we talked about it, where it's forming a little bit of a base right here. Market surge is not recognizing it. It's going a little bit of a wedging
This is a
action.
bull flag.
It is. So it's wedging action. So we want to see it kind of pop up around 120, 140, even if it's 130, beautiful.
Yes, so just draw a line from the base of the previous base and then
We're talking about right here?
no, from where it broke out.
Ah, over here.
Yep. To the top of the yep. No, yeah, right there. And then copy the same line from the top of this. No, just copy that line, the one that you just draw, take that same one. Can you,
This line?
yeah, can you select that? No, don't draw a different line. Yeah, just select that
What
and
the
move
heck?
that line. Can you move it?
There we go.
Yep. And now push it to the top of the last bar. The last bar, right. So that's your target. Your
200.
scale is not arithmetic, so the target might not be correct. But if you make it an arithmetic scale, then that would be your target. This is logarithmic scale, so this might not work. But that is a price projection technique.
So, oops. So I'll go here and go here.
Mhm.
Oh, it's about the same. Wait, did my settings just change? Auto fit. I'm just gonna try one more time to make sure that, yeah, it's about 200.
So it might, I
It
believe
might
it might go close to say around 200 would be right actually.
Oh, thanks for your insight for Intel. SanDisk is one of our favorites. We've been talking about this for months. I feel like ever since I took over this meetup from Floyd, we've always talked about SanDisk and how high bandwidth demand was there. I just remember seeing this. I was like, man, oh, September 1st, 2025. That's just simply amazing. One thing that I'm kind of looking into is that I'm not sure. Is anyone else getting the idea that sports betting and just betting on anything in the market is kind of getting to be in or a fad?
It's already a
Polymarket,
fad.
Yeah.
Polymarket. I know folks trying to bet against Polymarket.
One of the things that we wrote was a small market maker program to run on Kelsey.
Wow. It's great. Yeah, because I'm like, every single one of my friends like, hey, Robinhood has gotten Mia, thank you. Robinhood has gotten into betting. That's what the frick? Yeah, because I'm like, what is going on in this world? I'm like, people are gambling, right? And I always think about the lottery. The lottery is so big because most of the time is people who are more at economic disadvantages tends to buy lottery tickets for the hope of winning it big. But people who tends to have more economic advantage typically don't buy lottery tickets. So I'm like, is poly market a representative that the economy is going down as these stocks go higher because they want to win it big? Or maybe it's the disparity of social media and marketing that people are starting to feel poor and poorer, even though the wealth is going up. Because real estate's going up, stocks market's going up. So it's like just something I've been thinking about lately when I'm changing diapers at 3 a.m. If anyone else gets that thought at 3 a.m. too. So, but Madison Square, it's been doing phenomenally well. It's just been going up like poly markets, a lot of advertising in San Francisco about betting these days, betting and AI. That's all the advertisements I see. And the last one I really like is like what the heck happened to Humana? Because it just provides healthcare insurance. It's not really about a big end factor, but I'm like, why is this price so vertical? What is going on? Does anyone know? So, but these are the things I just think that leaders are coming because I'm starting to get more into the healthcare sector as I'm starting to look more into stocks. So we'll see. So, what stocks should we analyze today, everyone? Throw in the chat, yell it out loud, any way you want.
This
If
is
not,
your list that you created manually. This is not a scanner that runs and gives you the best performing stocks in the market, correct?
correct.
Okay.
These are stocks I like. I know people will disagree with me on this. And my leaders, I'm not like Jerry Samet where I will take hours and hours. This list will change every single week as I find later and greater, and I'll just keep on rotating through it.
Right. So a simple way of doing an automated list that will capture all these stocks is essentially just look for a specific price above a certain level. So I use $5. Average volume for 30 days, 100K.
Hmm.
Price has to be about 200-day moving average. Price has to be above 50-day moving average. 50-day moving average has to be above 200-day moving average.
Yep.
EMA 20 has to be above 50-day moving average.
Yep.
And the price has to be within 30% of all-time high. All-time high, not 52-week high.
All-time high.
Yes, and the price has to be below EMA 8. You can pick EMA 10 or EMA 21, doesn't matter. Essentially, I don't want an extended stock because I'm wasting my time looking at an extended stock. Something like the one that you just shared.
Yes.
I think,
Like, let's say Sandus. Sandus is
right,
highly extended.
correct. So, I mean, that's not my low risk entry. So I would not waste my time looking at that stock. And then the last filter on that one is 3-month performance should be more than 10%, so that the stock is kind of moving and not stagnated, going sideways forever and ever, kind of thing. So if you move, you can create this scan in any platform. It's very straightforward. There are no custom indicators and stuff like that. The only thing that not all platforms offer is all-time high. Luckily, TradingView has it. You don't need a subscription. Even in the free tool, you can use it. But if you set up this scan, then on a daily basis, you'll not get more than, anywhere between 50 to 100 stocks. And you can just run by them very quickly if they are in chart pattern, and you will not miss a single stock that is PML.
I'm writing that down. And yes, Cookie, I'll try to share it. I think I'm going to share all this on TradingView because it's the free platform, and I like the word free, where everyone can view it a lot easier than Market Search, which is a closed door platform. Yo, guys, do you subscribe to Market Search?
But you can create this,
Doing
the scanner in MarketSmith as well. I mean, it's pretty straightforward.
It is. There are days where I think I'm like, should I stop Market Search? We'll see. Not too bad. Mia says, Humana early in the year, Medicare Advantage reimbursement concerns ease. Humana has been hitting 52-week new highs. Investors are becoming more optimistic about medical costs. The healthcare sector has been acting as a defensive play. So maybe that's why I'm starting to, maybe in this volatile market where VIX is starting to turn up, that's why I'm starting to see a lot more healthcare plays. And we're going to take a look at some of my my lists. I haven't shown you guys this list in a while. It's my, screens. We're going to take a look at my IPO screen. There we go. So we're going to take a look at the IP market and see kind of how it's doing. So I do have some filters over here. I do want pretty much high quality names, meaning I want a minimum dollar volume that's coming in. Usually it's 10 million average daily trading volume at least. And we're kind of seeing how the IPO market does. So if you take a look at the daily, you kind of see that Swarmer, AI-based autonomous swarm technology for drone. Sounds great for all those performances at the New Year's in China. This one, PayPay Corp, it's not doing that great. We're just going quickly through. This reminds me of freaking Meta, where it just IPOs and just goes down, but the market cap's out 4 billion, and it's just as diabetes management, generate biomedicines, it's just pretty much going sideways, and pretty much AGI, it's retail banking, it's 1 billion market cap, and it just took a hit after its IPO. And these are all the 2026 IPOs that I kind of just quickly looked through. This is the one that it's not a ideal IPO because you want that Google of up on the first day. You want really high on the first day and keep going sideways a little bit. See, Bob's Discount Furniture. Oh wow, I forgot about this guy. Bob's Discount Furniture. It's kind of went up for a little bit, but it just went straight down. And as we see it for most of the 2026 IPOs, it hasn't been super much excitement. And all of these are huge market caps of billions. And it's not really super small market caps that I'm looking at. Medline is 48 billion. It did okay. Oh, Wealthfront finally IPO'd. I never really looked at the chart. So it's 1 billion. It's not doing financial management. JM Group. But this is last year. Yes, Mia, I can show the charts for Humana. What would you like to see? What would you like to talk about for the charts, Mia? Can everyone see my charts when I was scrolling through it? Mia says no. How about you, Richard or BD? Were you able to see the charts?
I saw them go through.
I can I can see it as you're move the mouse left and right, and I can see the tip or the data box go, and I just saw the bottom update.
I can see them.
I see
Um,
the charts.
we can troubleshoot that later, Mia. I'm not sure what happened. Maybe it's something frozen on the screen. Maybe it's the RAM on the computer, that super expensive part all of a sudden.
Can
I
you
just bought
see? Can you see Haley's hands flopping around there?
this is me holding a baby. Oh, if you guys can't believe it, kid is 6 weeks old. He's wearing 6 month clothes. What the F? What happened to my 3 month clothes?
That's one thing for my gene pool, but for yours, it's kind of odd.
Dude, I'm a 5'5" Asian dude. I'm not a big guy.
I'm only 6'5" and 300.
What? You're 6'5"?
Yeah.
I look up to you, BD.
Laura was 6'1" before her back surgeries.
Let's go. Guys, feel free to put in more stocks in the chat. We'll come back to it, analyze some more. But in the meantime, let's go into more of the educational content. So let's look at the leverage edge strategy update. Where are they on for TQQQ, SOXL? They've done pretty much freaking fantastic, sort of. So this is the TQQQ strategy. So they bought over right before April. They bought right in April, right over here. And there's multiple buys. There's a profit taking over here. You have rebuy, you do more profit take, do a drawdown. And currently, let's see the performance percent year to date. And you bought SOXL, go figure, can make 577%. I bet you that beats most of the, what is it called? The annual stock picking competition, which is absolutely ridiculous how much semiconductor has gone up this year. Oh, that's 4x. Oh, that's insane. And we take a look at all the charts. We can take a look pretty much in the beginning of June. This is TQQ on the left right over here. It's sold. This is the long-term play of TQQ. It's sold. You take a look at SOXL right over here. It's sold. You look at daily technology bulls. It never got a buy signal. And pretty much bulls did get a rebuy after it sold in the beginning of June. So there's a few, but most of the time in Woo, in Ropel, in MMTS, in actually not Investor Business Daily. I don't think that ever went red. It's that there's a lot of sales for the triple leverage ETFs. For FAST, which is financials, it was actually a buy. So every single industry is a little bit different. And these are the current events that are pretty much coming up in the next month. So employer, Juneteenth is coming up. So that's going to be a stock market holiday. So pack your bags, take some rest, go to the beach. It's going to be a hot summer. There's job openings. There's no FOMAC announcements. Also, besides Juneteenth, we also have July 4th. So July 3rd, the stock market holiday. So also pack your bags again in another 2 weeks and just take a break. Mia, you might need to adjust your layout on the top right for your Zoom because it might be just showing speakers without the so I need to up so my apologies everyone. I still have not updated all the videos on YouTube yet. I've just been peed on for the past few weeks and it's been a blast. So I'll get that uploaded shortly. I'm starting to get my bearings together again. So the next LEGS meetup is July 9th, and let's go into the educational topic. So the educational topic this time. Oh, before I switch over to education, any questions, any concerns, anything that's top of mind you want me to answer? Or the group to answer? Cool. So why I create these slides? It's because my life has so much fun and excitement these days that I'm like, how can I simplify it? How can I have all these fun and how can I keep enjoying all these fun and exciting times of going on minute runs for coconut water for the wife, changing diapers at 2, 3 a.m., or getting a little nudge saying, hey, I'm hungry, or hey, my diaper's wet. Let me change it. How can I simplify my life? And how can I keep enjoying that in the middle of the night? So I kind of say, can I analyze stocks faster? I know I look at it technically already. Whenever I look at it technically, that's when after I look at it technically, I look at fundamentals, then I look at the stories. Because the story is always the big end factor. And if the story is really captivating for me, that's when I really want it. So I already said disclaimer. So today, No need. So the goal of this is like, I'm bringing it down to 3 different ways, right? So stock analysis should be like, it should be fun. It shouldn't be like, oh, I'm doing this again, spacebar, spacebar, spacebar. It's more like, where can I find that diamond in the rough? Where it's at that little sparkle, where I'm panning for that gold and I'm finding that right pieces of gold. So I always ask myself these 3 questions. Is the stock worth studying, first of all? If it is it acting strong? Because the stock will still be there unless it gets delisted. But I want to make sure it's acting strong before I start buying into it. And also, is the risk manageable? If the average true range of a stock is like 14% daily, I'm not sure if I can manage that risk because when I do a portfolio buys, it's usually about 7 stocks. And when I buy 7 stocks, I do it in about 1 buy sometimes, and sometimes in 2 buys. So 50-50 or 70-30, depending on how much I want to how much it's extended, how much I want to leverage. There's like a few handful of situations where I really want to stock and I'll buy a 30% position initially just to see how it goes and then slowly add in about 30, 25, 20, and so on until I get a full position in my portfolio. If that's a stocks extended, because if I can do a 30% position, I can always extend my stop losses. This is a filter. It's not a crystal ball. It's very much an art. If this wasn't an art, we wouldn't be. If this wasn't an art, we wouldn't be here unless we're like Millennium Partners. Sorry, I was reading the chat at one of the at Millennium Partners, but they're a quant analysis firm and they're really darn good at it. And Cookie, I'll try to connect both you and Yogesh so they
So
can.
how do
Mhm.
you so how do you know the business before looking at the chart? Or
I don't know.
the
So that's the reason why I like my market search, and that's one reason I've subscribed to it. Because it gives me a quick like industry and then tells me a quick blurb about what exactly this company does. And if I don't understand it, I can look into it more. But most of the time, it's like, oh, it's semiconductor. It's fabulous.
so the same process, but I change the order. I do 2, 1, and 3.
We do 2, 1, then 3.
Yes, because first I look at the chart, is price and volume are doing something, which
Yep.
is the best performing stocks or relatively better performing stocks. Once they are on my radar, then I say, okay, no, this stock looks good. It's consolidating. Let's see the earnings story, or what is the story with the company, or what are they doing? And if EPS growth is good, if sales growth is good, if all other things align, then you go to managing risk as to, okay, what is my low risk entry? Where do I put my stop? And is this a worth a swing trade, or is it more worth a position trade?
That is true. So I do agree with you. I do look at the technicals first. That is a much better one. I do agree with you. That is a much better way to do 2, 1, than 3 because you want to see the price action. You want to see the technicals. You want to see the fundamentals. I do agree with that. So based on that, I should probably switch this around a little bit. It should be number 3, should be number 1. But for the sake of continuing, let's just go that way. So the first one's going to be, is the stock acting strong? Is because we filter by price. We're not looking at penny stocks. We're not looking at like, this stock is $1. Must be a good bottom fisher. I can catch a big fish at the bottom of the barrel. Not typically, but sometimes you do. Then after you find out if the stock's acting strong, you want to see, is the company growing? Are sales and earnings growing? So you look at the price, look at sales and earnings. And then what I like to do afterwards is, are big investors interested? Usually it's like Fidelity Contra Fund, some T Price Rose Horizon funds, and a few other funds that I really respect the managers that they have done consistently over a period of decades, over multiple different cycles. Because how do they manage 2000? How do they manage 2007? How do they manage the 90s if they were still trading back then? And that's a big takeaway from it. Oops, sorry. So after that, I want to look at what does the company do, because that is the end factor in cancel them. It's that, if are they doing something new, innovative? But if they're in healthcare, which I'm starting to look at, is that, do they have a product? Yes, we can agree that when they get FDA approval, there might be 100, 200, 300, 400% jump. But sometimes if they never get the approval, it might be a 50% downturn. Is that worth the risk? And that's the exit plan. You can buy those companies if you manage your exit plan. If you're saying it might go up 500% with a 50% drawdown, is it worth it? Maybe. Can I handle it emotionally? No, I can't, so I don't do it. But some other people can handle it emotionally, and it really depends on your mental psychology. So if anyone here is, my apologies, if anyone here is able to manage, is really good like healthcare and trades and FDA, I would love for you guys to do a presentation on it because that's something I was into, but it was just so much regulatory stuff that I couldn't really understand. So I like the earnings, I like the price, the technical looks good. What do I ask myself? What's the best way to test if someone understands a topic? Is that they can simplify it to the common person like me, like you, if in one sentence. In It's like, what do you do at the company? Well, I do a lot of different things. I do this, and this, and this, and this and that. Then I have to dig deeper and like, okay, what's your thing that you have the most fun in? Or it's like, oh, what do you do at a company? I help my customers. Let's say I do timesheets. So I help my customers reduce headache when paying employees. Easy. That's timesheets. The only reason we have timesheets is so that everything's logged and people get paid properly. So this is the format I use. This company helps X customer do X job by selling X product slash service. Noun, verb, noun, or adjective. Kind of like basic English class where you go to basic structures. So if you guys want to try, but I feel like you guys are all way smarter than me. We can also pick one stock and we can explain the business in one sentence. So what I'm going to do is I'm going to go back to market search. I'm going to go to one of my infinite screens. You guys should be seeing my market search right now. Yes, you are. Ooh, let's go to my IPO list. Huachun, I picked a Chinese company, didn't I? Develops and manufactures equipment, structural parts, and cubic garages. So this is an example where I have to click the website. I just paused there because the website popped out and it's a 404 error. And I feel like this looks like this is a Chinese company, and I'm a little what's it called? I'm a little always skeptical about Chinese companies, especially anything that's overseas and not based in the United States, because they have different reporting structures. Like what happened at Luckin Coffee, where they said they were doing better than Starbucks, but they really weren't, and they were falsifying numbers. So let's go to something that is not HQ. Ooh, let's do HQ in San Francisco. Beautiful. So it develops medicine for cardiovascular, renal, and metabolic diseases. Easy. I don't even need to do that little line since this is one of the main reasons I use market search. And then I always go to weekly. Then I look at sales earnings. How's it doing? So this is telling me it's actually earning stuff, and it's finally starting to sell something. And this is when I have to start looking into it. But what the heck happened here when the earnings came out? It's interesting. So those are things that I have to look at more. But it's in health. I would say this company develops medicine to helps people with their healthcare needs. And what is it? Renal, cardiovascular, and metabolic. So is the company growing? So for the company we just talked about, we talked about sales growth, earning growth, and the quality of growth. So if you have a drug that GLPs, right? It treats obesity and it helps with weight loss. How many people are gaining more and more weight in every single year? If it's a weight loss drug, does it mean that if it's a weight loss drug, does it mean that people are getting fatter? So if people are getting fatter, do they want to lose weight? That's the key. If people are gaining more weight, is that something that they want to address? If that's not something most people don't want to address, then it's probably not a good durable company because people don't mind the weight. So, and if it's a GLP drug, is there other companies coming into the market? What are the side effects? Is the market opportunity large? How is there a obesity epidemic? Maybe, maybe not. So that's how you do the quality of growth. Sales, earnings. We can do a lot of fundamental analysis on TradingView on market search. There's a lot of stuff that gives us just the fundamental analysis. One thing I always tell people is that watch out for one-time huge growth in certain quarters, because there's sometimes they do real estate sales and all of a sudden it's like, oh my God, they earn so much more money. But it's because it's a one-time expenditure that they didn't correct the data on. And I've had a few discussions with investors and they do correct the data on earnings. when it's like a one-time real estate sale and it was like $40 million building. So it looks like they just made more money without more sales. So sales typically has to grow along with the earnings growth. But remember, we're just going surface level before we dig deep. Is the stock acting strong? Like Yogesh said, this is number one in his priority. He looks at price, see how it's going, and then seeing, okay, price is going good. I don't want to see something that's like, oh, it IPO'd at $185, random number, right? $185, then went to 150. Now it's 130. Now it's 100. Oh, 100 is a nice little number. No, it is a nice number, but not in the direction it's coming. If it IPO'd at $10 and went up to 100, ooh, now that's a very interesting number. I think we all would agree here that we'd rather see a stock go from $10 to 100 than 185 to 100. And that's when it answers the question. Are buyers showing up? Yes, buyers are showing up. Are they breaking key moving averages? If it's from 10 to 100 in a period of like 1 year, oh my lord, they're breaking everything. They're breaking EMA 5, EMA 10, or SMA. Relative strength towards the sectors, the industries, they're all breaking. Volumes, I haven't seen stocks that have huge run-ups without volume spikes too. Typically, volume goes up higher and higher and higher, and it just goes even more volume. Yes, that means market cap goes up, more interest comes in. And if it's 10 to 100, it's definitely near new highs. Question 4, are big investors interested? So first of all, the market. Is the NASDAQ doing well? Is the S&P 500 doing well? Is the over market trending up? If it is, great. Then after that, we can go a little bit smaller. Are there big funds owning it? Are there $100 billion funds owning it? Are there $1 trillion funds? Is a sovereign fund owning it? Are they accumulating it? Is it getting added to one of the indexes? I feel like I'm talking about SpaceX sometimes, right? Is the sovereign funds acquiring? Is it getting added to the S&P 500? Is it getting added to the NASDAQ? Which listing is it on? Is it going to be more on the NYSE? Is it going to be more on the NASDAQ? Because NASDAQ has looser listing requirements. Are they accumulating it? Because let's say, for example, Warren Buffett bought United Healthcare. And when Warren Buffett buys United Healthcare, some people say, you know what? Whenever Warren Buffett buys it, if it goes 20% lower, I'll buy a position in it. So they will always try to beat Warren Buffett because Warren Buffett typically doesn't buy out at bottom historically. Like he's selling his Apple shares and he's buying Google. And he's also buying like UNH or United Healthcare. So some people do that.
But
And
he's not buying common stocks.
no, he's buying preferred shares.
Yes, there's a big difference.
Oh, that is true. Even though you buy the same price point, you might not have the same. Wait, so if you buy preferred shares, what does that mean exactly? Because there's the price, but there's options behind it, I assume.
So preferred shares have different dividend structure.
A preferred share is basically an open-ended bond. So you're actually buying pretty much a set coupon or dividend in perpetuity. Asterisk. In a lot of cases, they're also callable or convertible into regular shares.
So you get pretty much higher, you get better dividend. But what happens if the stock doesn't give dividends? Do you still get dividends if it's preferred shares?
The preferred share is ahead of the common shareholder. So if there's no money left, it's the common shareholder that doesn't get it.
Especially in bankruptcy. So then how does Warren Buffett like sell his, like, let's say Apple, right? He bought Apple and he's selling it right now. If he bought preferred shares in Apple, who buys the preferred shares? Does he sell it to the open market?
Yeah, there's a market for that. Just the same way there is for bonds.
Yeah, he can sell it in the open market or he can sell it to the company.
Oh,
In a lot of cases, the company's going to want to buy it back because then they're retiring
Right.
debt from that standpoint.
Yep.
oh, that is true. And that makes the investors money.
So when he takes a $5 billion stake in Apple, he's not buying in open market.
That's why we don't see like a huge volume accumulation.
Correct.
Well, sort of. You have 24 hours to print the transaction. So it doesn't, if you and I negotiate an off-market trade right now, we can make that print occur later on during tomorrow's trading. And so like the hedge fund that I used to do some work for, if they had, there was times where they were buying or selling 2 or 3 days worth of volume. So they would negotiate that with the other large players off to the side, so to speak, and then it would print later on in the next day.
So does it actually print in somewhere like retail investors like us can see?
Yeah, it would just cross the ticker.
Gotcha. Oh, so that's why. Is that why people watch the ticker then?
Yeah, and that's part of the reason that once in a while when there's a spike, that spike may not necessarily push the market immediately, but the people that saw it will put that into their the spike itself isn't exactly what happened, so it wouldn't have cleared the book. But then the people that see it and say, "Holy shit, something happened," and so then they start to run.
That makes sense.
There's a
Like,
lot.
So, which is why when the news hits the market that Warren Buffett bought UNH, what happened? UNH jumped because
yes.
everybody said, awesome, let's buy. But typically, if you watch what exactly happens, is the stock goes up and after a few days it drops. It most likely, in many cases, it will drop below the buying price of Buffett,
Yep.
which is where many people say, okay, he bought at $4, I'm going to buy at $3. So even if it goes down, I'm okay. I'll hold it because they are using Warren Buffett's analogy here where he's going to hold for next 10 years.
So
But what they don't understand is he's not putting 25% of his portfolio in one stock. He's doing very good position sizing, which most people don't. So they're trying to be value investor without understanding the 360-degree view.
have you guys ever did that game, the random marble game, where you can win the game if you position size well? Like we all have the same strategy, but what really matters in how we trade is how we position size our portfolio, and that's where the big bucks are made.
Mm-hmm.
So if anyone, I forgot what's that game called, so people can look into it. I call it the marble test, but I know it's not called the marble test. But position sizing is number one. We can give you all the strategies you want, but it's how you mentally and psychologically prepare your portfolio, and that's how you make the most amount of money. And thank you, BD, and thank you, Yogesh, for explaining about going deep dive into preferred dividends. I never really cared about it because I'm like, I don't have access to this. I might have access to some pre-IPO stock, but I don't have access to preferred. Most of the time, I don't have access to preferred stocks.
Get it through most any broker. The marble demonstration. There's actually I found a Python script on GitHub for it to demo it, but I remember doing that in Excel in college.
You know what? You know what would be fun? One of these meetings, I'm gonna do the marble test, and I want to see if I can actually do it all on Zoom and see if we can get the results on it. And I think that'll be kind of fun for all of us to see who gets the high score, and it'll be fun to see that I get zero, and I lost all my money because I kept on betting 100% after 3 rounds. I'm wiped out. So, question 5. Thank you, BD. So, question 5, what is my exit plan? So, this is key to keeping your portfolio. If you have a 99% drawdown, what percent increase do you have to get to make back to your original portfolio size? Is it 99%? No, it's more like 1,000% gain that you need. So that's why the exit plan really matters, because 30% drawdown, it's like a 35% gain. 50% drawdown, it's like 100% gain. 75% drawdown, it's like a 400% gain. So the more you go down, the more exponentially better trading you have to do to get it back. And some people are really good at it. I've seen it done. I've seen hedge funds who take 90% drawdowns on some years and thousands of percent gains in other years, which is absolutely scary. Actually, I should get some of those guys to come and speak. And those guys, I'm like, but they're still beating the market, which is a crazy thing. Like S&P goes up 500% over the past like 10 years or something, and then he would be up like 3,000%, even though he has 90% drawdown years. It's crazy scary. Exit plan. Before entry, after entry, and if it works. So the problem with the exit plan is that it changes over time. I always say 7% stop loss, right? But if I'm up 100%, where's my 7% It's not going to be 7% below my buy point because psychologically I get hurt. So your exit plan changes over time depending on the performance of the stock or the non-performance. If I bought it at $100, I've held it for 8 weeks and it's at $110, you know what? Very likely I'm going to sell it because it's been 10 weeks. I've made 10%. Good enough. It's kind of like going sideways for me. There's probably other stocks I'm interested in that would do much, much better.
So based
So
on my back testing, your first stop loss is what you said, your stop loss, where it's 8% or 10% or whatever risk tolerance you have. Once you start going into positive territory, then your stop loss should be based on either trailing stop or should be based on ATR stop, which is also known as chandelier stop, especially if you're doing position sizing and stuff like that.
agreed. Because it's just if I'm sure everyone here has been hurt by, hey, I got a 20% gain. One few weeks later, hey, I have a 0% gain. I'm like, ugh. And it's just, I don't know how to describe that feeling. It's just yucky.
And if you do have a good gain, like 100% gain or anything beyond 50%, and you don't want to cash out or go into short term, then you can use option strategies to cap your losses, plus also have some upside, which is known as a collar. So you can do that as well.
There are times when one of the few times I use options is usually like earnings when I'm kind of scared of the market. Like let's say in my Nvidia, right? I'll buy enough options to hedge my downside on earnings sometimes because I'm like, oh, this is such a big gain. As if it's a 10% drop, that's a pretty large chunk. So I would
Yep.
buy an option on it to make sure I control my downside. And it'll
Yep.
cost me like 1 or 2% of the
Right.
because I don't mind giving up a few percent to protect against a 10% loss. So, what is this 5 questions? It's pages. So, just like you said, Yogesh, price is number one. I wanted something with P first, right? Because I realized I should have kind of reorganized all my slides. P is number one because price is king. One of my past mentors have told me it's like what he has done is that his boss would take a piece of paper, a stock chart, put it on the floor, stand on top of his desk, take a look at it, and all you see is the line of the price. And that is what matters the most. So the second thing, and the rest is not in order. This is just to make it like memorable. It's what advantages. What advantage does this company have? If you guys disagree with this statement, please tell me why you disagree. I believe being big is not an advantage. Right? Just because you're the biggest phone maker in the United States does not mean you have an advantage. It all depends on the company itself. Big is not an advantage. So growth. Can the business continue growing its revenue and its earnings? Let's say that big phone company. Can it continue growing its revenue and earnings? Maybe, maybe not. Does it even have an AI on its phone right now? It doesn't. They just released a new Siri, but how's the Siri doing? There's a whole wait list then, and all my friends are trying to get in and just trying to test it out.
So usually after price, I would look at growth first. If
Mhm.
there are no revenues and earnings, why do I waste my time looking at what the company is doing?
Agreed. 100% agree with that. I would say it's just not a nice acronym. Market to price. It's like PG Pagages. I don't know. I don't know how to pronounce PG. PGH?
Sorry to break your acronyms.
No, break them. I'm happy that you break them because participation makes me smile. Yeah, but it's like I could only choose one, right? It's like that little triangle. It's like if I make an acronym, it's like what's the best way to make it and also make
Don't
sense?
waste time making acronym. Use AI that will give you a bunch of acronyms.
Hey, that's what I did too. That is what I did. Is like AI is like, hey, these are all the acronyms. I didn't like all the acronyms, so I actually changed all the words like price advantages. That's why I was like, I don't. A used to be accumulation, but I'd rather do advantages instead of accumulation because that was an accumulation turned to sponsorship
Mhm.
and blah whatever. Fun part about me making presentations and acronyms. So, and the other things is like sponsorship, exit plan, and kind of the advantages, right? So exit plan. One, so if you don't remember pages, I would remember page. I've had discussions with people where it's like sponsorship does not matter. You are following the herd, and the herd could be wrong, and the herd could be late. Does not mean they'll be consistently good. But in my opinion, is that they help you make a floor. If I see quarter over quarter when they're doing the financial filings, they're still accumulating, and there's multiple one of these big companies accumulating into a major position, that gives me confidence. So you can agree, and I can agree to disagree. I do know where the shortcomings are coming from because once all the big guys buy it, who else is gonna buy it? Us? We don't move the market unless you're
No,
unless
it has to be in context. What you're saying is absolutely right. Without sponsorship, stocks don't move. But you're buying stock at the tip of the iceberg when it is already 1,000 to 1,000% up, then you would be the bag holder.
Sandus
So,
potentially.
right. So that's why I keep saying LRE, low risk entry, right? Your entry matters when you enter because that defines your risk.
I think the most important thing is like where do you buy? And
Right.
depending on where you buy, how much of your portfolio did you buy? And
Right.
that defines your whole position sizing.
Yes.
And if you can like nail that, if you do anything, if you kill those two things, oh my lord, it doesn't matter what stock you trade. Your batting average could be 10%, but you could be making a killing.
Yep.
Oh, if you guys are curious, my batting average, as I've been calculating over the past years, it's like I'm at like 20, 30%. On my when I previously traded individual stocks, my ETF batting strategy is kind of ridiculous at 80%. But I've been getting lucky. I still say I've been getting lucky. I don't have a good strategy. So, how long should each stock take? I say 5 minutes only because it's a nice number. 5 questions, 5 minutes with a 5 letter acronym, right? 3 5s, easy. But honestly, every single stock should take you less than a minute. Like, can we explain in one sentence? Read it. Does I make one sentence like my company gives short, concise sentences that people can read and share. Twitter. Price action. Is my price going up? Is it going down? Is it going sideways? How's the history of my price action? Is that all-time high? Is that a 52-week high? Or is it just on a downturn? Growth. Sales earnings. As Yogesh has said many times, and as I've agreed with what Yogesh said, it matters quite a bit. In a downturn, I always say earnings matter because earnings prevents a company from going bankrupt. If you're making money, it's harder to go bankrupt. And I think that's a generalized agreement. Sponsorship, make sure big people are buying. Risk plan, where are you going to be wrong? Remember, the market changes week by week, day by I say week by week, sometimes day by day, sometimes speech by the guy in yellow hair. But who knows?
So if
But
you're not using Market Smith, how do you do all of this in 5 minutes or 1 minute?
so it's pretty much I would have multiple screens up. And as I'm researching, so Marcus Smith helps me mainly with the 1 minute. It's
Right.
always hopefully go to the website, go to the about page, and see what they're doing. And pretty much as I've gotten used to it, you memorize companies by their tickers and you forget their names. It's what happened to me. It's like when people's like, "What is that stock?" And I'm like, "Oh, I own that stock. It's this ticker." I'm like, "Oh shoot, I forgot." Because they're telling me like, "Oh, do you own this company?" I'm like, "What is that company?" So as you get more and more into the daily routine, which happened to me, was like I just memorized ticker names, and I even forgot companies.
Right. But even if you go to the company page or whatever you're using, most do not publish growth percentages the way Market Smith does for sales or earnings. They'll give you raw numbers,
Yes,
so you still have to do the math.
that is true, because that's the warning I also gave that people that most data is not corrected. Like TradingView does give you fundamentals too.
Yes, it does.
Do you know if it's any good, the fundamentals on TradingView? I've always wanted to.
So do one thing. Just open a clean chart. Can you just open one layout chart instead of 4 or 5?
You got it.
It's just too noisy.
I
Sorry
was
about
like,
that.
no, no. One chart. No, I think it's
Yeah.
much easier.
So now go to the indicators and type in EPS or earnings. Just type in earnings. Okay. So these are yours. Go in the community side. Scroll down. No, you were right. Just had to scroll down. Okay. Yep. Yep. Right there. So lazy beer. Yeah, the second one, the levels up tools. Yeah, that's the one. Pick that one. Yeah, there you go. So you just move it somewhere else so that Yeah, okay, you can see it right now. So you can see their EPS growth. I think you can select, if you go in the settings for this indicator, you can select what it shows, but you see year over year, it shows EPS green, and then it also shows quarter over quarter, and it
Yep.
also shows the percentages. So you can, right there, you can see the chart, you can see the EPS growth, you can see the sales growth. So that is right there. That tells you all the information with the chart. And now if I want to see what our analyst ratings going to be, so just click on that first icon on the right top, right below publish. Oh, you already have it open. So you can see your Apple at the bottom. Yeah, so just scroll down all the way on that thing. You'll see analyst rating at the bottom there. Right, yep, right there, right there. Yes. So it is showing you buy or strong buy. So that's
Mhm.
another way that analysts are looking at this particular chart and they're providing this rating. So that kind of gives you that initial confidence that, hey, everything is aligning, the price, volume, everything looks good, chart is an uptrend, EPS growth is great, sales growth is great, analyst rating is great. Now you can decide whether you want to take a deeper dive and look for. Now, the only thing that is missing here, in my opinion, is the institutional sponsorship, because TradingView doesn't have that information. So that
Mhm.
you will have to, I mean, it will give you institutional ownership. It doesn't tell you how many funds are in this. Is it going up, or it doesn't give you that kind of details. So that you'll have to go to some other site to look at. But based on this, you can do pretty good analysis.
What I'm doing right now.
And this indicator is free. So if you have a free TradingView account, you can just add this indicator. There are a bunch of more similar indicators, so you can find them.
That that is super cool. So what I'm doing is, while you were speaking, I wasn't paying attention. Sorry about that, Yogesh. But what I was doing was I was confirming with Market Surge, how do the numbers pair up? So if I look at April 2026, this is March 2026, sure. We look at the sales is 100, sorry, let me turn off this. 100, 111.2, 111.18. That's pretty good. In January,
Yeah, so they're not going to match
114.6.
exactly because the numbers will be different on different platforms, but they should be close by.
Yes, and it's pretty darn close. Like I'm paying 1,500 a year for the software, and I'm paying what?
By
Barely.
the way, the person who created this indicator, he has MarketSmith, so he has verified all that already.
How do you know that?
Yeah, that's a secret.
Okay, cool.
It's not secret. It's John. I forgot the last name. That's who
Barcoba?
created. No. I'll let you guys know the name. He's written books and stuff, so it's pretty famous.
Bollinger.
No, I can't remember right now. I just know it, but I just can't remember right now. I'll let you guys know. Or you can just go to levels up to, yeah, and you can find his website, and there are a bunch of indicators he has created.
Dang. Okay. Fine. So this guy, low up tools. Interesting.
Yeah, I mean, there are more pro versions which are paid indicators. You don't, I mean, if you want, you can go for those, but the free ones are pretty good and really nice.
Oh wow, he actually participated in the US Investing Championships too.
Yep, yep. Pretty well known. I just don't remember the name right now, but pretty well known.
Yo, gosh, I'm always thankful that you're here every single time. Can't thank you enough. And he does publish stuff once. He hasn't published things recently. So what is it? Whoa, he does ants, sentiment gauge. Sorry, I'm gonna make the screen smaller. I have a large screen. Oh, there we go. Earnings gap up acceleration screener, RS line, new high screener, up on volume screener, upside reversal screener, minimum earnings trend. Wow. Oh, he has the earnings line pro EPS tracker.
Yep, just like Market Surge.
That's crazy.
You can pretty much do everything that Market Surge has, except the one part that I mentioned where it does not have institutional sponsorship, how many funds are in the particular stock. That information is not there. So there's nothing you can do to create it.
That is 3 weeks tight price consolidation, RS line.
What
Oh,
program was this, Yogesh?
What is that?
What program?
This is TradingView.
Oh, TradingView. Yeah. Okay.
Yeah.
oh my God, he actually have Webby's RSI. Oh, time to follow him. And I'm just gonna throw this into the chat so everyone, because I think this is actually super helpful. So, yo, guys, I'm curious. I'm going off topic now. It's like, what other free tools do you Is there any other free tools you use that can help people get started in trading?
TradingView is by far the best free tool because it provides you with all functionality. You don't need to pay. The only restriction is you cannot add more than, I think, 2 indicators at any one point if you don't have a paid version. But otherwise, it has pretty much everything. All indicators that you can think of. You can add indicators that others have created and provided for free. It has strategies. You can create your own indicator even if you have a free account, and you can write your own strategy if you have a free account, which most platforms do not offer, but TradingView does.
Mm-hmm.
And if you like it, then just wait for Thanksgiving, and it's like the annual premium membership is something like $200 to $50. It's
Yep.
worth it, I would say. But yeah, I mean, TradingView is one of the free platforms that offers a lot of stuff.
Agreed. TradingView has pretty much replaced my Thinkorswim.
I mean, I do use Thinkorswim as well, and I like that one too.
Like Thinkorswim gets me even more charts on a page. Like, yeah, but Thinkorswim is crazy.
Yeah, but TradingView is the another one platform that I like is
Oh yeah.
stockcharts.com, especially their ACP charting version. So if you type in stockcharts.com/ACP, A as in apple, C as in copper, P as in Pope.
Mm-hmm.
Yeah, so this is an interactive version. Again, it's a free version. I use free version here. They have bunch of indicators here, but the reason I like this one is because they have a lot of breadth indicators. Of course, TradingView also has breadth indicators, but I mean, they're a little bit clunkier, I would say. You need to know how to use them in TradingView and set it up properly, and it requires some work. Here it is a lot easier. Now, how do I know what is the ticker for each of them? So just right click where it says stock charts. Just right click on it. No, not here. Yeah, and open a new window, a new tab. Okay, and now type in their NASDAQ space advance. Do not enter. Do not click. Okay, now you see at the bottom it says more results. Yeah, click on that one. There you go. So you can see all the breadth indicators right there. You can see NASDAQ advance decline. You can see NASDAQ volume advancing, declining, all that stuff. And you can change the search. Now you can change it to SPY or something else, and it will bring up those. So I like to use stockcharts.com/ACP for the breadth indicators, which I mean, only TradingView has them, but they are not very easy to use, or unless you know what you're doing, it's not that easy to view them. Here, it's a lot easier. And then I take this and then I put them in the other tab that you had opened, the ACP tab. And then I use it here to do my analysis. But again, you need to know what are breadth indicators and how to read them. They are not like your traditional indicators. They are not RSI and stochastics. So there is a book on Amazon for breadth indicators, market breadth or market indicators. Very famous book. It has like 26 or something different indicators that it talks about. It's like it's a very big book, like 300 pages. Right there, the first one. So this is by far the best breadth indicator book. It talks about a lot of stuff. You don't need all of those, but you need, like, if you know like 5, 6, you can just use those in your daily, not daily, but on a weekly basis. I use breadth indicators to gauge the market. And stockcharts.com has all the breadth indicators explanation as well. So if you just do a Google stockcharts.com breadth indicator or something, or indicator explanation or something, it'll show you all of them as well.
Oh wow. I'm gonna have some fun when I wake up in 8 hours. I have some reading material to go through. Thank you, Yogesh. So that's one thing that market research has kind of irritated me on, is that I always like to track the NYSE the breadth indicator, and I've always just done stock charts now because it's like they kind of taken out the old symbols of if S&P 500 and advanced decline line to see if AD line is actually reaching new highs, and if the price action of the S&P 500 is reaching new highs. And if there's a divergence in it, that's when I know there's a potential market top. And that's when I research deeper. So thank you, Yogesh. And this all stemmed from, how do you do this in 5 minutes, Haley? And I was like, I have no clue, but Yogesh has a clue. So thank you, Yogesh. So where was I wrong? Where I was wrong was like I didn't show you the software to actually do a 5-minute task. Where Yogesh did show you in Trading View using level up tools, you can actually add the indicator called earnings, sales, and volume dashboard. And now all of a sudden you can actually look at the sales and earnings similar to market search and can get a similar result. So, and all these dots lines are events or dividend payouts because we're doing
I
Apple.
pasted a link in the chat. If you can open that one.
You got it.
Whatever I'm sharing, nothing is proprietary. It's all available on the internet. So here is a list of all the market indicators. So these are all breadth indicators, and you can see the list is very big, but you can go through them if you want. The ones that I care about is mostly advanced decline, high, low. Those are the ones that I look at, new 52-week high. Those are the breadth indicators that I look at. And the book also talks about same, plus the book also has a bunch of more. Hope that helps.
Do you like McKellen summation index?
I use Macklin oscillator.
I'll use the oscillator, not summation. Because I use summation when
But as I said, right, these are not your typical technical indicators. This is not overbought, oversold RSI indicator. These has to put in the context. So some indicators work very good at the bottom, and some indicators gives you clue at the top. So it has to put, like, you have to like say, okay, one indicator is telling me this, the other one is telling me this. Now you form the context, right? That's how you have to read them. This is not like, oh, if the indicator moves from 20 to 30, now I'm going to buy. That's not how it works.
is there any indicator you use that it's not a lagging indicator that's a forward indicator?
Not following your question.
Moving averages are a lagging indicator. So like I would use the advanced decline line as a forward-looking indicator before a market turns. I feel like the advanced decline line will actually tell me that before the market turns. Is there
Not
any
necessarily.
A leading indicator, right? That's what you're.
yes,
Yeah.
leading indicator. Thank you, Rick. Oh,
Right.
well,
So there is no true leading indicator as such. If you're looking here, there is leading indicator, but not here. There's a reason for it, because all these indicators are based on what? They're based on stocks, they're based on price, they're based on certain aspect of the market, right? So they will be either in line or lagging always. Sometimes, yes, they will work the way you said. I see the divergence. Does MACD divergence work every time? No.
no.
So it's the same thing, right? Now, as I said, there are other indicators. So what are the other indicators? So there are two macro indicators that I follow. I think I already shared it. One is unemployment rate that is
Yeah.
published in Fed site. So you can look at that. It tells you where it is going. It tells you the trend. That is what matters, not what is the current level. And in conjunction with that, there is another one that is credit spread. Yes, that one.
Yep.
So if you go back and understand the history, what has happened, like when do we see a recession? Recession only happens when both credit spread is rising and unemployment rate is rising. They both have to rise to have a recession. And if you think about it, you'll understand why it makes sense. It's hard to borrow money. That's why credit spread is rising. Nobody wants to lend you because economy is not great. Unemployment rate is rising because economy is not great. So it makes perfect sense that when both are rising, market will not go up. We will have a recession. Economy is contracting, right? What happens when one is rising and one is not? So if recession, so you have a bear market when credit spreads rise, but unemployment rate does not rise. That is where you have a bear market, which is what we had in 2022. So the credit spreads were rising, but unemployment was not rising.
Oh, I can go back to 2022. I have to go to the other one.
Yeah, they keep changing the ticker, so you have to like I don't know why they keep changing, but you have to like find the right one that gives you enough history. But essentially, those are the two macro that I look at to kind of give me, okay, is this just a pullback? Is it more than a pullback, or what's going on? Kind of thing. But again, as I said, these are not your traditional RSI, stochastics, TSI, CCI, PPO. These are not those indicators. So it's not like, oh, if it's at this level, then I need to buy. It's at that level, I need to sell. You have to connect the dots. You have to put things in context. I hope
Agreed.
that helps.
It does. It's like back to saying, what's the big picture look like? Then you, after you look at the big picture, you go into the small little details to see the confirmation or the
Right.
divergence in your
Yep.
theory. Cool. I love talking about how we're wrong, or when we have to confirm ideas or disprove our ideas. Scientific method, right? And here's the other fun part I have for this presentation. I make a decision tree. Analyzing a stock. Yes, maybe no, because maybe is part of life. And as we grow older, I think there are more maybes than yes or no. I keep on, people always tell me, like, is that true? Maybe. I need I need more information. Right? If so, if it's a maybe, you study more deeply, then you have to reevaluate. Is it going to be a yes or no? Then you can always add to the watch list or pass for now. Pretty simple. Where it's like, I like the stock. It's very interesting. If you like a stock and you like the company, you're in the industry, you know it, you have an advantage right there. So that's when you can just say yes, add it to watch list, and just keep watching that stock because let's just have some fun with stock investing and make money at the same time. So I think we had a very, very good discussion of credit spread, the unemployment, of how to use TradingView as a free software to look at fundamental analysis, how to really do this into a 5 or even less than 1 minute. TradingView doesn't have sponsorship, as Yogesh has mentioned. And as Yogesh has said, price action is what dictates everything. Then look at growth. So this slide needs some editing. So we're going to skip this audience discussion and the takeaways because we have a lot of good takeaways. The market environment, we've talked about it also, where you look at the big picture, what you understand as the whole world. And as you understand the world as, let's say, Earth, going to the United States, as United States go to California, California go to San Francisco. So one page worksheet. I just like at first, just like Ugesh said, make number one price, make number two growth and sales. So, but pretty much answer these 5 questions and it'll be a lot easier. What I used to do in the past is that I literally print out hundreds of pages and I literally would just like mark up charts, circle stuff, go indicators, and then I'll have marked up charts by some of my peers or some of the people that have been doing this for years, and I'll compare my notes to theirs. And like, why is that a second stage base? Why is that a third stage base? What is this trend? And what I've learned is that you can't analyze a stock by itself. You have to analyze the stock in the context of that environment. When I'm looking at 1920s, what is 1920s like? History does matter because it gives you context of what was happening at that time. So study history. It's fun and you get to make some money. Closing thoughts. It doesn't remove a good checklist does not remove judgment. It just improves your judgment. It helps you hone in, gives you a system, gives you a routine of how to trade stocks. So, and of how to trade stocks. And when the money comes in, and if it does come in, it just says you are right. But here's the caveat. Trading is messy. And even if you're right, you can lose money. So it's very messy. You can lose a lot of shirts off your back, but most of the time, manage your risk, manage your portfolio size. And remember, pages, price. Any questions? Any comments? Is there any? So I would like to talk to you guys more. Love seeing you guys every single month. Brings a smile to my face, especially when I'm not getting peed on. And if people think it's like, why is he making that joke? I have a 5-week-year-old that that I still haven't gotten the hang of changing diapers yet. So I'm still working on that. So that was in reference to. Any other stocks you want to take a look at? Any indicators? Any questions for maybe BD, Rick, Yogesh, or anyone in the group? Even Cookies here.
Light,
Yeah.
LITE.
Lumenton. I actually know that ticker.
Oh, and hang in there with your baby, man. It's an amazing time.
What's the most amazing thing is 2 weeks ago, I can hold them in one arm. Now I need 2 arms. I'm like, what just happened? And I'm like, every week is a little bit different because I have to adjust so quickly. And I'm not used to a human growing because I haven't grown in like decades. Wow. Optical and photonic products. So fiber equipment, telecom, internet speeds. What the heck happened to their earnings? Absolutely fantastic. There's a little pause over here. You can call it, you can't call it a base, but I'll call that a base. I'll call this a base too. So we're on 1, 2. Oh, we're actually basing here too. Let's take a look at our daily chart. I haven't seen this one. You guys heard of power of 4? When all the moving average of 10, 21. Wait, this power of 3. When the power of 3, when 10, 21, and 50 all kind of converge together, and when the price action pops up right above this, that might be a good time to buy. Earnings, EPS, annual, how are we doing here? The past high for the last about since 2019 it was $6 and estimated this year is going to break 8. So it's growing quite a bit. Holy shit, their PE is 148. But hey, make more money, PE is going to stay same if not lower. The new factor of this is internet. I assume that N factor is just the technology of how fast we are trying to share information, and this is one of the hardware factors of how quickly we're trying to share information. Nice stock. Yogesh, I feel like you would have an idea. You have a certain comment about this. What do you
Oh,
think?
well, everything is aligning, right?
Yeah, everything's aligning. It's the third stage space, power of 3, it's going up. I mean, there's an early buy point. There's a traditional buy point. What else do you want? The market's doing great.
Well,
RS
all we
line,
need is Iran deal, and IPOs are coming in the next couple of weeks, so this should go crazy, right?
yeah. I mean, I'm really looking towards the SpaceX IPO tomorrow, and I want to see how that handles at the end of the day. Is it gonna pull something? Is it gonna pull something out of the water? Is it
Well, it
gonna
might go to 200 in first 2-3 days and then drop after that, trickle, 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 and probably go to 100 first. People will say buy the dip, then probably 80 buy the dip, probably 70 buy the dip, 50 buy the dip, finally at 40 or 30 when everybody drops the towel, or people who are buying, they are bag holders. They are
dude? It
long-term
was
investors, not bag holders.
it was long. Yeah, I mean, like it's like my friends who bought XAI, and all of a sudden it's like, I thought this was a 1 point. I thought this was gonna be bigger than the Arabs for Aramco. I'm like, it was at the IPO, or it might pull. I always say it might pull a Meta. So let me just give everyone reference. Meta's IPO. This is a monthly chart. So imagine it IPO'd, it just went straight downwards for about 6 months, consolidated for another year after that. Then if I reach back the IPO price. So when you go from $45, well, it wasn't 45 back then, to like, what is this? So this is the high was $45. Wow, on the dot. And the low was 17. That's a hard hold. 50% drop. And you're still at 50% at the low here, still 50% at the low here until you finally hit here. Those are the back holders, and they tend to sell out over there. So that's what might happen to SpaceX, or I don't know what happens to the stock market, or you might pull a Google, which I've referenced multiple times, where it's like, hey, I IPO'd over here. Hey, I'm gonna go higher. I'm gonna go even higher. You know what? I went so high, I need to take a break. Then taking a break, and I'm just gonna keep on going. And we pretty much until we reach a little climax. And then we correct. Well, this was the financial crisis at 2007, right? So it could pull a Meta, or it could pull a Google. But one thing I do say about Elon Musk is he's a damn good marketer and businessman. So he did a very good job of having a company that has negative earnings have the most valuable company, potentially the most valuable IPO ever. So good job to that man. He works phenomenally hard. And the other
Check
stocks.
SITM.
Oh, I didn't put this on my watch list. All my weekly lines are so messed up right now. Let's look at daily. So there was a little earnings gap up that happened, and undercut earnings gap up. Ugh, that hurts. Consolidating the earnings every single year. Wow. It's gonna make 2026 analog semiconductors. I wonder if they make like full 48 volt systems, because that's a little bit more efficient. But that's me being geeky. How's the sales? How's the earnings? Triple digits, triple digits, triple digits, triple digits. Wow. Did I say triple digits yet? So price, phenomenal. Earnings, sales, absolutely phenomenal. It's definitely inside the top industry. It's in semiconductors. Everyone loves semiconductors at the moment. The price, there's a small little correction. RS line, honestly, is still doing pretty darn well compared to the market because of what's this? 50% gain. There you go. That's why the RS line is still way up there. Yes, it corrected from what's this? 900 down to 600. So you have 30-40% drop, but it's holding up pretty darn well relative to the market. Sector wise, that should be my orange line. Period 50 is doing pretty darn well. So where is the buy point? Let's look at the daily chart. We have 1 week, 2 weeks, 3 weeks, 4 weeks. I would even draw. This is a high volume. Where's my high volume bar? Ooh, that might be an accumulation, but it undercut it right over there. What is wrong with my volume? I feel like it's weird. No, it's logs.
It's consolidating above its 50-day moving average.
Yeah, there is consolidating. You're right. It's consolidating above 50. I'm just debating. Would I draw a oopsies? Would I draw a trend line right over sorry, bunch of AI hotkeys. I draw a trend line right over there on this bar, but then I'm kind of breaking a few rules of like definitely 900 is one of the points. But is this one of the trend lines where it hits 1, 2, 3? But then tomorrow it just goes up? What happens? Or are we gonna wait for a little bit more consolidation over here around 700 before it goes up? I don't know. It seems very where there's a lot of you can draw all the lines, all the numbers you want. It's like if price goes up, you just buy it. It's
Well, all these
fantastic.
stocks are in the parabolic phase, probably the last parabolic move.
Maybe. Cool. What do you think? Sounds good. My in-laws are here helping me out with the kid. Any other stocks you want to analyze?
Have the kid pop on camera.
The kid pop on camera. Kid's nowhere close to me. I have a crib next to me, but not a kid.
Form, FORM.
My bad.
You guys will see all the stocks that I'm mentioning, they are not at their all-time high point.
Sorry. I don't know what's happening. My Chrome is not.
It gave up.
It gave up on me. There we go. I'm like, I recently switched over to Chrome from Atlas because Claude has a better inference system than OpenAI at the moment. So I went over to Claude, but I keep on hitting limits and maxes because I tell it to do too many things. So Yogesh said, notice that how it's not at all-time highs. It's not at definitely no one's at all-time highs, but it's consolidating at all-time highs. Similar to what that screen filter that Yogesh said, it's within 30% of all-time highs. And is this? Yes, it is. 160 to 130, of course. We're looking at consolidation right over here, 160, 130. Was it 25%? Consolidation
So
base. We have about 8
what
weeks.
I'm trying to point out is when it is at 160, that's not your low risk entry. So even if it shows up in your scan, what good it is. So I deliberately set up a scan that I don't want to look at stock that is already at a high point, and that's not going to be my low risk entry. I'm also saying my low risk entry. That doesn't mean it has to be same for you, because your risk appetite is different than mine.
Yes.
So for you, you might say, oh, well, 160 is low risk entry for me. That's perfectly fine.
I love the stock so much, I'm just gonna buy it at any price that I see it when it comes onto my radar.
Right, exactly.
Oh Lordy, I'm
Well,
gonna
that is the meatball strategy. If you saw the presentation from, I think,
Harry.
yeah,
Yeah, I did. I was talking to Harry about this. You just buy it at any time. Like, yeah, if it shows on the screen, you just buy it. I'm like, it's okay. That's the strategy, and he's doing pretty well. And he's beating the indexes. Harry Friedel. I talked to him at the IBD meetup last year. I'll probably meet him again. I've been talking about his strategy, and it works. Jerry Salmon has a strategy too. And all these leaders are beating the indexes. You just follow it to the tooth and nail. One thing I've learned as I've gotten older is these are really smart guys. They've tested and tested and tested, and they're smart enough to know that I am not smarter than the program I made. And the program doesn't have these human emotions that happens. And you just execute the program and you execute 10 years, compound interest, compound returns does wonders to your portfolio. Even you
yeah,
start with $10,000.
it does.
Yeah, it's just absolutely fantastic. So, Yogesh, I think you are definitely 100% right because it's like if I'm thinking about trying to save time, what I'm doing is looking at pricing that goes higher and higher and higher, and just by feeling, it's actually a terrible idea because like it's like, oh cool, look, it's a leader because the price is high, but I can't do anything. I don't historically, I very rarely bought at all-time highs. I don't think I've done that in 10 years of in the last 10 years of my trading. I just haven't bought all-time highs. I could never pull the trigger. There's something about it. Oh, it's at $500. And I went to 1,000. I could have bought at 500 and make 1,000. Like, I don't care. About 500 could have dropped to 200. I could have lost my position. I don't care.
Yep. So
So
that's why I have a filter where it says it has to be below 8 EMA or 12 EMA, whatever EMA you want to put, doesn't matter.
yes,
But it cannot be at all time or the high point.
because it's like right over here. If it was yesterday, it would have yesterday or even the day before yesterday, it's below my 10-day moving average. And that's a perfect filter, is within 30% of the high. So it's
Right.
like it might potentially be viable
Right.
because
So it
it's a
would show up
short-term
in my
return.
scan on that wherever your mouse is currently, right just next bar to it. No, 3 bars behind it. Yeah.
Ah.
Yeah, somewhere
So
there.
this-
That's where it will show up on the scan. And that is where I put it in my watch list. That's not my buy point. But now I know, okay, good. This is above 50-day moving average. It's consolidating. EPS growth looks good. Sales growth looks good. Awesome. And now you wait like a cheetah, bounce on
Yep.
it.
So you're not the fast. You don't have the most stamina, but you are the fastest. But you have
Right.
to know when to use your speed.
Correct.
That is a good example, like a cheetah. Any other stocks? I really like this screen, Yogesh. Oh, thank you for sharing every single time, dude. You're awesome.
That's
Any
it. You
other
go with
stocks?
that filter. I do it every day. You can do it on a weekly basis, doesn't matter. But you will not miss a single TML.
Oh, someone reads Roper report too. TML is true market leader.
And if you do that in TradingView, then like this one, you're looking at one stock. In there, you'll be looking at in a chart form on your screener. So it's very easy to discard, and you can go through like 70, 100 tickers within 5 minutes.
Because you just take a look at it. How's the trend? Do you take a look at the weekly or the daily, monthly? Which one is your preferred?
I like to look at weekly typically, but I also do daily.
Because I also start with like weekly, and it's like, oh, this looks a little interesting because I need at least like I need at least like 3 bars for the
Right.
weekly for me to do anything.
Mhm.
Then I also set my screener on my dailies to give
Yep.
me an alert to look at the weeklies.
Right.
Any other stocks?
I'll let others to talk now.
No, I think they're quite enjoying I hope people are quite enjoying our conversations. We've only lost 4 people in the past 30 minutes, so people are pretty interested in what's going on.
Well, that a direct segue onto this other stocks. You'd made the comment about running out of your tokens on Claude. If you, I did a little presentation on AI and mentoring last week, so I still have a lot of the stuff in my head. If you have not used what are called skills in Claude, if you've got a lot of prompts you're reusing, it will save you a lot of tokens.
What are skills in Claude?
Basically, it's condensing and pre-saving, giving commands like, so for example, for mine, please write an optimistic and a pessimistic analyst review of the following stock, and then give it the stocks to run.
Are you using a project? Is that why? I can't show my Claude to everyone
Oh,
because
sorry, and you have to be using Claude Code.
oh, you're in Claude Code. Gotcha.
Sorry about that.
I know what you're talking about now.
Sorry, I don't even use the web interface. I forget it even exists.
You don't hit limits on Claude Code? Are you on the max plan?
No, I'm on the Pro.
Just a pro plan. Interesting. Because I've been using, so I subscribe to both OpenAI and Claude, and I've been using Codex a little bit more because I just don't hit limits. And sometimes I just hit limits so many times on Claude Code or on regular Cloud. I don't use Claude Code too much. And I have Cloud projects that I use because there's always certain things I need to do.
I have the Pro versions of Claude and Perplexity, and then
I
Llama.
also have Llama. I have Perplexity. I haven't been impressed with Perplexity. So I'd rather it's like Perplexity, Gemini, you're on the same level. Then it's like OpenAI, then it's Claude on top. But,
Yeah, I've had better luck with Perplexity than because OpenAI and ChatGPT both had a lot of really nasty ass hallucinations when I started using them.
ew. Like there's like sometimes I'm surprised about the hallucinations. It's 100% wrong. And I know it's 100% wrong because it's like so for
I
me buying
usually use Gemini to create ideas. So like say I have some idea, and I will not code anything, but just ask Gemini, what do you think of this idea? And then kind of have a conversation there, and then build the feature list that I want to use or create or code, and then use that feature list in Cloud AI, and all of this on free plan. I don't use any of the paid plans. Build any of my indicators that I want to build.
So what I've started been doing is I started having other AIs help me develop prompts for Claude because it usually takes me a few prompts to get a better idea of what I'm actually asking. Because what I realize is one sentence is not enough of a context for any large language model. Shiva says use .md files for hallucinations to stop. What is
Basically guidelines.
MD is a markdown file. That's actually a file format, but the skills are saved in the markdown format.
Gotcha. That makes sense. So that's why it will stop hallucinations because you hard code commands into certain things.
I'm not going to say it stops the hallucinations. I would say it may reduce the hallucinations, but
if you're using them on your computer, so you're installing them on your computer, so it has access to all your files and everything on the computer, right?
Yep, it does.
Yep. That's why I did not install it on my computer.
Because I used to share my my logins, but the problem is like Claude has dispatch now, and someone could literally go into my computer if I share my login with them now, and I'm like, oh, this is a little scary. If you start messing up my file organization system or use OpenClaw where he's like, organize my files for me, and then also delete system files, my whole computer gets BSOD.
Yep. True.
So I'm like, this is like, it's getting to the point where I'm like, this is getting smart enough. It's not smart enough to do, it's smart enough to do damage to my permanent damage to my computers now.
Essentially, you are giving control of your digital life to an AI. That's what you're doing. You
Yep.
just don't realize it, because you think when you ask it to do something, it does it. But behind the scene, it can send all that information back to the AI server. You just don't know it.
That's why I have friends who are running. That's why I have friends who are running like Mac, what's it called? The Mac Minis. They buy the little box and they just run a localized program. So all their personal information is not uploaded to the server.
Does anybody have know local AI that works?
My friend does it. I don't know how well it works for him because he runs his own company and he doesn't
Okay.
want his proprietary information to anyone else. So he always runs it on his local machine at
So
home.
I tried Sanctum. It's a local AI thing where you can install it on your computer, and it will be just like your cloud AI or any other AI. You can like download different models, but they will not communicate back to the server.
Mhm.
It's not great. I'm still trying it, but first of all, I don't think it can work on a regular computer. It does require a lot of RAM and stuff like that. So you need to
It
have like a
does.
16 GB or
It's
32 GB RAM at a
more like
minimum.
32 at
Yeah.
minimum. 16
So
does not work. I tried on my MacBook. It doesn't
correct.
work.
So, so I'm wondering if anybody knows any local AI.
Yogesh, let me ask my friends who runs AI
Mhm.
companies and see
Sure.
what he does because he always tells me like he always tells me it's like Haley, you suck. You need 64 gigs of RAM on anything to run any because you don't have enough parameters. You don't have enough parameters, it's just gonna suck.
Yes.
I was like, damn, this guy is brutal to me, but I love it because it's just easy.
so how underpowered is your machine?
For him, I'm in the Stone Ages because
I've
it's
got
like,
380.
what's up?
So I've got 384 on my machine that I'm using now.
3 or 4 gigabytes of RAM?
384.
Three. You have 384 gigabytes of RAM?
Yes.
I can't even count that high, dude. What the heck? That's amazing.
I have one VM for interactive brokers. I have one VM for having my Claude helper. I have one VM for doing my job search stuff. I have one VM for doing video editing. And so depending on what I'm doing, I turn
Yeah.
on or off the given components.
Yep. That actually does make sense because you're actually having multiple machines in one. Cool. With that AI discussion, is there any last words before I end the meeting? That was actually a pretty cool discussion about how we're kind of using it. Cool. So I have some tasks to do for everyone. I'll what I'm going to do is I want to take a look into more of the level up tools. I'm gonna see if I can do a marble test for our next meetup because I think that's kind of fun and that helps us do the marble position, helps us get a better idea of position sizing. And if not, I can just ask Claude to make a marble test that we can use it based off Zoom.
Yeah, someone posted an online link for that marble game. You might want to look at that.
Will do. So with that, I will end the June meeting. I hope everyone's gonna have a nice, enjoyable summer. There's still gonna be a meeting next month. I'll decide on the educational topic. I'm kind of leaning towards the education breadth topic because that's something that's near and dear to my heart, and that's something that really helps me with the market. So maybe it's a breadth education topic, and I'll send out emails to everyone's like, hey, what breadth do you want me to talk about? I'll probably pick 10 and we'll get into the down and dirty, but we'll do some of my favorites, which is like the McKellen oscillator, summation, New York Stock Exchange, breadth, and data, and a few others. So thank you for coming. Thank you for listening. Thank you for participating, and talk to everybody soon.
Thank you. Have a good day. Bye.
Hey, Haley, 2 minutes.
2 minutes. What's up?
Do you want to, if you want to send me the video, I can try to edit it down and throw it onto YouTube and some of that stuff. I've got a little extra time on my hands.
Sure. So I do a Zoom cloud recording, and I can just send you a link to the Zoom cloud recording, so you can all have all the files.
Yeah. And then I'll be selfish. If you don't mind, I will throw that into my volunteer section on my resume to pad it a little more, but
Do it. You should.
yeah.
Anything I can do to help you. And
No,
you're
but
helping me.
I figure that's, since I've got the video editing on there, I can carve that up and do all of that.
That would be pretty cool. Do I have a way to contact you, BD?
BD@softly.com, via LinkedIn,
Okay. BD at what.com?
Softly, SOFTLEY.
Oh, just your last name. Okay. BD softly at softly.com. Okay. Will do.
BD@Softly.
Oh, BD at softly. Got it.
Yeah.
Okay.
Or eagleanalytics.co or babytrumpballoons.com.
Man, you are
But
connected.
you're in San Francisco, so you'd probably find it funny.
Later. Cool. So BD, I'll connect with you. I'll send you the Zoom cloud meeting. Usually takes about 30 minutes to render. So you should get it to me in about 2 hours because I have a feeling once I go upstairs again, it's gonna be diaper changing, get some food, and potentially finally get some sleep.
Okay, I understand that.
All right. Thank you for everyone listening, and I'll talk to everyone soon.